We're about to give you the 5 most important reasons to separate your business and personal finances with a business bank account. Here with us today is Natalie Garces. She's an entrepreneur and content creator, and you can follow her on social media for tons of tips on both personal and business finances. Before we get going, I want to remind you to like and subscribe to Viably for more business finance tips, and let's get into it. Okay, reason number 1, we've put taxes first here, Natalie. Every small business owner has to pay them. Why is tax time so much easier if you've got a dedicated business bank account?
When you establish a business and split your personal and business finances, you have the ability to take advantage of tax deductions, and that includes writing off business expenses. So when I say write off business expenses, that means if you're a content creator like me, you could write off your laptop, your phone, editing software, ring light, and so much more. And by keeping your business and personal finances separate, that makes it easier when reviewing your bank records for purchases that qualify as tax write-offs. You don't want to miss a deduction because you weren't able to organize your financial statements.
Awesome. So content creators, ride sharers, online sellers, they all have expenses. You all want to maximize your deductions for those expenses. And I think the other important thing to cover here too is you want your records to be accurate, right? And it'll be a little easier if you've got one dedicated account with all of those expenses.
By mingling your personal spending with your business operations, that could really lead to a lot of mistakes, like claiming deductions you didn't deserve or claiming a higher amount of business expenses than you actually had. So if you're sloppy about deductions, this could lead to higher scrutiny from the IRS or even result in a nasty IRS tax audit, and that can result in penalties and fines.
Okay, so number 2, building your business credit. A lot of small business owners or first-time entrepreneurs, Natalie, they might not even know they have a business credit score, but it's actually really important. Why is this such a big part of building a business?
Yeah, so establishing business credit can help you protect your personal credit, it can help you secure competitive loans, and it can help you get better insurance rates and so much more. New businesses need to build credit because good credit scores make it easier to obtain financing, and it may qualify them for better terms from vendors.
Yeah, exactly. And having a bank account dedicated to business expenses will help your business establish that credit, that it is making payments in the name of your business. And so it'll help you build that business credit. And I think the other important thing, Natalie, to remember about business credit is that it's available to anyone that you work with. They can go see your report.
Yeah, unlike personal credit scores, business credit scores are publicly available. So banks, partners, vendors, they're looking at your business credit profile. Anyone can go to one of the reporting agencies and look up your business scores, though they may have to pay to do so.
All right, number 3, accounting and bookkeeping. Natalie, I don't think it's high on the list of things small business owners like to do, the books, but I think if you've got your business expenses all in one place in a business bank account, it might help. So what are the ways that it can help you with accounting?
So you have your transactions all in one place. You don't have to go through line by line and have to differentiate whether it's a personal expense or a business expense. You can simply download your business statement and know automatically, hey, this is all business.
Perfect. And we covered the tax implications of that earlier in the video, right? That's a really good record that you can trust when you file your taxes. But we should also talk about the ways that it will help you optimize your business, because now you've got data that you can trust and make decisions with.
By having your business expenses and income all in one place, you can see where you can cut business expenses, if you're overspending on a business subscription, and you can see where you're making the most money, which can help drive business decisions, whether you should start focusing on one effort than the other.
All right, number 4, protecting your personal assets. So many small business owners may not realize that if they mix their finances in a bank account, that they could actually put their personal assets at risk. So Natalie, what are the risks if you don't have a separate account for your business?
Yeah, if you ever get into any legal issues and you don't have that distinction between your business and personal assets and finances, the court could actually deem that you've pierced the corporate veil, even if you have an LLC. And that means that your house, your cash, your retirement, your assets that you've worked hard for could all be up for grabs. So open up a business account so you can protect the assets that you worked hard for.
And number 5, last but not least, professionalism. Natalie, tell us what you mean there.
Yeah, if you work with partners and clients and vendors, paying from your business account builds credibility and looks legit.
Awesome. So your 5 reasons one more time. Make your taxes easier, build business credit, make accounting and bookkeeping easier, protect those personal assets, and make your business look professional. So those are 5 reasons to open a separate business bank account. And if you are convinced by this video, we've got a link for a no-fee Viably business account in the description. And again, if you enjoyed the video, we've got tons more small business finance content. So hit that subscribe button and follow us on Viably YouTube. Natalie Garces, thank you so much for jumping on with us.
Thank you for having me.